all the way down even below 10,000 and accumulating, knowing that my long term is that it does go to 100 and higher than 100,000.
Hey guys, welcome back to the channel. Today we have Gareth Soloway giving us his market analysis and price prediction for Bitcoin, as well as his take on the economy and where crypto is headed in the next few months. With many stocks sitting in a very tight spot, we can now see a scenario of many banks defaulting, but Gareth believes the Fed will pivot and stop further interest rate hikes, preventing an economic disaster. Let's listen to this interview with Gareth Soloway as he gives his investment advice and price prediction for Bitcoin, as well as where the crypto and stock market is headed in the next few weeks. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
Just because I think it's going lower doesn't mean I'm not going to hold some Bitcoin. I think that doesn't make sense to a lot of people because they're like, well, if you think it's going lower, why would you hold any? And then why wouldn't you just buy it all down there? But honestly, for all the years I've traded, I've been wrong many, many times. And so my policy is, I call it the shotgun effect, which is basically once we get below 20, then I start nibbling a little bit. And then if it drops 3,000 or 2,000 more, I nibble a little bit more and then drop, so basically I was pretty confident it would go at least to 20. And so once we got there, then I started to nibble a little bit, and I'll just keep nibbling all the way down, even below 10,000 and accumulating, knowing that my long term is that it does go to 100 and higher than 100,000. So the key is there. If I'm wrong, and let's say it doesn't get to 12, 13,000, let's say Frankie's right, at least I have some exposure on the long side versus being sitting there and saying, oh darn, it never got to my level. This period that we're going through is very, very similar to 2018, right? So let me go back in my chart, and actually I'll show my screen and we'll try to just take a quick look at that. So bear with me as we go back. So basically we had this long period in 2018 from September all the way to November, right? So that was about 2 months of sideways, very tight. Look at how tight these bars were right here. And what we ended up seeing was a little bit of a dip, then a rally up, but then ultimately a big rollover. And Bitcoin actually lost 50% of its value. It went from about 6,000 and change all the way down to about 3,000 and change. So it's very possible this could be what we're kind of in right now. And so I do think I agree with you, what you said earlier, is that if we do get that pop, for me at least, I'll be looking to take profits into that, expecting that at some point we will have that bigger rollover. The positive is about it is that that was the final rollover to the low before we started to move up. So maybe that would be the final drop. Interestingly enough, if you take 50% off of Bitcoin right now, it puts you just below 10,000 as well. So kind of interesting how that all comes together there.
Soloway knows the Fed realizes something must be done to save the economy because rate hikes could have a domino effect that triggers a severe financial crisis. With inflation being at a record high now, in the long term, he sees many economies getting destroyed by what's happening.
And this is the killer, right? Is that bear markets are where you actually get the opportunities, right? It's where Bitcoin was 65, and instead of buying it at 65 or 69, I mean, you're getting, even here at 19, you're getting a great opportunity where, I mean, I literally, when I was making the calls of going to 20 and we were at 65, 69, people were like on Twitter, like, I will sell my kidney to be able to buy Bitcoin there. Of course, no one's selling their kidney right now, right? But people have that opportunity. I mean, you basically can buy 3+ Bitcoins for what you were paying for 1 Bitcoin back in just a year ago. And so opportunities are made here. It's all about, are you going to hold your thesis? Is the thesis still valid for Bitcoin? Yes, it is, in my opinion. You just had too much liquidity in the market, and cycles are cycles. You got to get the washout.
People literally just thinking the asset class is going to die. There's no more money to be made, and then it's going to start coming out where it's like, oh wait, maybe we need regulation for crypto to do well.
That is 100%. I could not agree more. That I've been since the very beginning. I'm like, please come in and just give us the rules of regulation. It's going to happen. I hate the fact that it's taking this long because I think it hurts. I think that's part of the reason why volume's so quiet on Bitcoin too, is because it's hard for big money to invest. And remember, folks, I'm coming from like a stock world where you have hedge funds, multi-billion, 100 billion, trillion-dollar pension funds. There's no pension fund that has $1 trillion that's like, hey, let's go invest 1 or 2% in Bitcoin, because they don't know the rules. And if you don't know the rules, you can't risk. You have a fiduciary responsibility to your clients. you can't risk their money without knowing rules, or you're going to get in big trouble. We need these rules. And remember, if we want it, I mean, this is the double-edged sword, right? We don't want big money in there. We don't want manipulation. We don't want government in there. But then at the same time, people are like, but I want Bitcoin at $500,000 or $1 million of Bitcoin. Well, the only way it's getting there is when you get this massive inflow of money to come in, and then it's going there. So it's like, you know, do you want to live, you know, free and like, you know, no regulation, no nothing, but then I'm going to stay poor with my Bitcoin at 50,000? Or do you want to say, screw it, I just want to make a lot of money, in which case you need the bigger players in there. And I think it's important to recognize that before you buy anything, think about what is your max exposure that you're willing to take on, right? So, you know, let's say, you say, okay, I'm willing to put 100K in Bitcoin. Then stick to that as your full position, but then divide it into segments, right? Divide it into eighths or sixths or tenths or fifths, and then spread them out, right? So the worst thing, and this is a big mistake that people do, is they say, oh, well, I'll put the 100K right in here at 20 or 19. And then when it drops to 10, they're like, oh crap, I guess I got to put another 100K in. And now they're over leveraged, which then becomes an emotional trade. And as soon as you get emotional, the market's going to take you by the you-know-whats and swing you around and make you do the wrong thing at the wrong time. I've seen it. It's happened to me when I was younger. So I'm really clear before I even enter a trade. I always think about what is my total position going to be, and then I divide it up if I'm going to dollar cost average it.
Quick question. Do you set limit orders? Like, do you have your levels preset and you just let price fall through and hit them?
Yeah, and again, I might adjust limit, but one of the things that I learned in the stock game, which was more so with smaller stocks when I was early on, is that, you know, if you do a market order and it's a thinner stock, you can actually get a really bad print. And so I've just gotten very addicted to saying, all right, when I put out a limit order, I get this price or better. At least I know my worst case, right? And so it's not so much with Bitcoin, it's pretty liquid, but even so, I mean, you could get a slightly worse fill depending on how liquid it is at that time. And so I always suggest people use limit orders. I'll even tell you this little tidbit is that sometimes when I'm trading, I'll even put a limit order slightly above the market. And at least, like, let's say I really want to get filled on a trade. Well, I don't want to put a limit order below and it doesn't fill me. So I'll put it, let's say the offer is, I don't know, $20. So I'll put my order at 20.02, and then I'll sweep the offers and at least get in on that trade. But I know that that's the worst price. 20.02 is my worst case scenario. And that gives me that ability to, it's almost like doing a market order, but knowing the worst that you're going to get is 20.02.
Investor sentiment was at an all-time low before last Friday's recovery. Even large hedge funds are placing bigger bets, but many of them have high levels of leverage, which dramatically elevated their risk. For Bitcoin, it might be difficult to determine if it makes sense to sell a position and purchase lower if the price declines. Soloway advises against selling since there is a good chance that a bull run will commence soon and investors would lose out on profits. What do you guys think about Gareth Soloway's prediction for Bitcoin and the direction the stock and crypto markets are headed in the next few weeks? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.